Hello, this is Michael Schulman, and thank you for joining me. I'm very excited to be able to teach you a simple, repeatable strategy that can put significant, even surprising amounts of income in your pocket. What I'm about to teach you could be the difference between you having the financial security to enjoy the life you want to live or being forced to work into your 70s or 80s. So if you have any interest at all in generating safe yet significant income from your portfolio, please listen and take notes. By way of a quick introduction, again, my name is Michael Schulman. I have over 30 years of experience in financial markets as a trader, as a financial analyst, as a writer, and as an educator. I've published 2 books, Sell Short and Made in America, both of which can be found on Amazon.com. I'm a regular contributor to reputable financial sites such as Seeking Alpha, Investor Place, Main Street Investor, and many others. Over the last 5 years, I've taught investors just like you new income strategies for today's low income generating environment, which is why I'm best known as an options income master who helps investors and traders safely and consistently create more income by selling options. In this training, I'm going to share with you 3 key secrets to income investing that should ignite your income and make you hungry for more. The 3 secrets I'm going to share are the goal-first approach to income investing, finding the right income stocks every time, and something I like to call, and hopefully you will soon learn to call, the RTS cash formula. And this is something that's very big. Many of my Options Income Blueprint members have experienced my approach to generating income by selling options, and in their case, puts. And they've seen that selling options can consistently generate more cash income every week, every month, every quarter, every year. Over the last 5 years, I've largely focused on selling puts in my Options Income Blueprint program, and I will continue to do so. But many of my members asked for help on the other side of the table, selling covered calls to be specific, and today I'm revealing a powerful yet simple strategy using the sale of calls to ignite your income. It's the best of both worlds, an investing approach with a trading mindset and cash generated from frequent trading. I've been selling covered calls, own a stock, sell a call, generate cash here, there, and everywhere for more than 20 years. Many of you have done this as well. What I'm going to teach you is different. For some of you, very, very different. This is not some cash here and there. This is a set of covered call tactics and strategies designed to produce large weekly and monthly cash flows, while at the same time enabling you to enjoy most of the appreciation of the underlying shares. I'm going to pull back the curtain on this strategy so you can see how it's different, because when you embrace this strategy, you will be able to create income almost on demand, set what you now consider to be extreme income goals, and then actually beat them and generate more income in less time. And I'm going to share that groundbreaking idea, the customizable income portfolio. Whether you have $10,000, $25,000, $100,000, $500,000, the strategy I'm revealing will work with any level of portfolio, any portfolio size, and any level of investor experience. So let's get started now with my covered call blueprint strategy. It's a simple, step-by-step approach to generating weekly and monthly income by selling covered calls on stocks you already own. You can and should do this, of course, by yourself. On stocks I will recommend, this is where it will really get exciting in a few minutes. On the 10 most widely held stocks, you may own them, I may recommend them, but there is money to be made from them. And even on widely held ETFs, I may recommend, but more importantly, I actually follow and provide call recommendations for. And later, I'll reveal a new advisory service for investors who want to make more income from selling covered calls, a lot more. So let me show you what's possible. I'm talking about income returns you may not have ever thought possible. I'm talking about generating 40 or 50% more income from your portfolio each year from the combined impact of the appreciation of your shares and the cash generated from selling calls against those shares. Regardless of portfolio size, small, medium, large, supersized, does not matter. Yes, these numbers are very, very big. Actually, I have members who are already doing it now. Here's a sample, an unsolicited email from one of my members, Christian B. Michael, I just ran the numbers and I'm selling calls on all of my positions, and already on an annualized basis, my results are 40%. To put those numbers in context, if you have a $15,000 portfolio and you consistently apply the methods I'm going to teach you, including the picking of correct stocks, you could potentially pay yourself $6,000 in cash and income. a $50,000 portfolio, that would translate to $25,688. And a $175,000 portfolio could create up to $78,000 and change in income. And those are what I would call limited potential returns. And you'll see why I say the word limited in just a few minutes. Now, for those of you well experienced in the field of covered calls, please give me just a moment to educate those who are here now who may not be as experienced as you. If you've never sold a covered call, let me give you the basics. You should know, or will now know, that in order to sell a covered call, you need to own 100 shares of the stock you want to sell for each contract you're going to sell a covered call. Those shares serve as collateral and must remain in your account until the call expires or is exercised by the person who bought the call. You can sell one call option for each 100 shares you own. So if you hold 500 shares of Facebook, for example, you could sell 5 covered calls. You may have heard a term called a naked call, by the way. Please put these out of your mind. These are calls sold without the collateral of the underlying shares. They are beyond dumb as an investment tool for individuals. Depending upon the stock you own, you may be able to sell either a weekly call option or a monthly call option. My approach in my portfolio and in my training and advisory services teaches you to always buy the stock then sell at calls. I do not recommend anyone should ever sell a naked call. Now, when you sell a covered call, you're creating cash first. Remember, the first rule of thumb for income investors should always be, always collect the cash. Selling a covered call option is no different in that respect than selling a put. The buyer gives you cash to complete the transaction. When you sell a covered call, you're selling the right but not the obligation for the buyer to take over your shares of the stock. You are limiting your risk exposure because the following continues to be true. Nearly 80% of all call options expire worthless. That would be our objective when we sell a covered call, to have that option expire worthless, because that means we keep 100% of the cash from the sale of the call, and then we can do it all over again. However, when you own shares of a stock and sell covered calls, you also benefit from the price of the stock rising, perhaps even staying neutral, dividends the company may pay you, and the ability to buy back the call and sell another one if the stock temporarily moves down, increasing the cash you produced from that stock. This is called rolling down. And the ability you also have to buy back the call and sell another one when the stock moves up. This is called rolling forward. Rolling calls is one of the most important tactics to learn as an investor or trader, and it's an incredible and important part of the tactics I teach in selling covered calls. Rolling continues to be, to my mind, the smartest way to create more cash income, even if a stock drops in price and gives you time, it gives you time to let the stock price recover, if that should ever happen. What most investors do typically is buy stock, dabble in selling a call or two here or there, and then freaking out when they get called out. We're going to fix that for you in my Covered Call Blueprint program, and I'll share details on how to do this in a few minutes. So when do you sell calls? It all depends on the stock, upcoming events, and of course, the available premiums, the cash you receive from selling the covered call. That said, the better premiums and the most cash is available at the beginning of the week or the beginning of a new monthly option cycle, and this is when most covered call trades should be made. Assuming you sell a weekly call, this means you only need a place to trade on Monday or Tuesday morning, review it on Thursday, close it on Friday. When you sell a monthly option, you can sell further out in time to get the most bang for your buck and still have plenty of time to withstand short-term changes in the price of the shares. That means, just like our weekly paycheck approach in Options Income Blueprint, with my covered call blueprint, you'll be able to double down and cash multiple paychecks, perhaps every week and certainly every month. Those are the basics. Now, I want to get into this, what I call the secrets of income investing. As I shared earlier, here they are. The goal-first approach to income investing, finding the right income stocks every time, and the RTS cash formula. Before I do so, I need to start with the foundation of selling calls. Great company, great stock. Great companies and great stocks. What I do and what you should be doing is to invest in great companies that in turn are the basis of great stocks. There is no time to get into the nitty-gritty of stock selection, but the process of selecting stocks for selling covered calls is different than the process you're using right now to identify a stock you want to own. What is that process? The company first, then the stock, then the characteristics of the option chains, then the premiums you can find when selling a call on that stock. We'll cover all of this in some detail later, but first, let's get started with that secret number one, the goal first approach. Here's where most income investors start their income trade, premium. They go for big premiums. I want you to start your income trade from here. What's my income goal? So how do you set those income goals? You set an integrated series of goals based on your income or cash needs, either for everyday expenses, monthly expenses, or perhaps reinvestment goals. You have another goal for the single trade, then perhaps your goals and the returns for them on a weekly basis, or perhaps a monthly basis. And this depends, of course, on whether you're selling a weekly or a monthly covered call, and of course, what your annualized return is on your portfolio and potentially on that transaction. We'll dive into the numbers in a moment, but the annualized return is really what you're after. Each of the other components lead you to reaching that goal. Although we're focusing on income, if you're an investor or trader, such as myself, who still needs growth in your portfolio, you can still set growth goals and use the strategy I'm teaching to generate cash to reinvest and achieve those goals. Remember, at the top, we set those aggressive goals that may have surprised you of 40 to 50% on an annualized basis. This is the process on how you get to those numbers. Let's break the process down so you can do this for yourself. First, you need to set your income goal. How much income do you need your portfolio to produce? Since we're aiming for higher returns here, you can be more aggressive. When selling covered calls, let me show you how to get these numbers and then put them in a portfolio context for you so you can see how profitable and powerful this approach can be. On a per trade basis, our minimum goal should be 0.5 to 1% return on capital per week. This translates into 2 to 4% per month, and now you're looking at the numbers, it translates into 40, perhaps 50% per year. Let me repeat, our weekly goal is 0.5 to 1% return on capital, or a monthly goal of 2 to 4% return on capital. If and when you meet these goals, those annual returns will be in the 40 to 50% neighborhood, perhaps higher, depending on the stocks you have selected for your portfolio, stocks that generate those kind of premiums. I'm setting these goals for you here right now because I know they can be beat. More importantly, I'm giving you a fresh new way to look at your portfolio, looking at the availability and the value of calls when you are selecting stocks from a true income perspective. This is how you need to pay yourself income from your portfolio or generate cash for reinvestment. Now, in an extreme example, admittedly, but a 50% annualized return on your capital means $12,500 on a $25,000 portfolio, $25,000 on a $50,000 portfolio, and $250,000 on a $500,000 portfolio. And here is the key. You won't be taking any additional risk as you'll learn as we go through this training. It's the same risk you take by owning an equity. What do I mean? Well, if you're committed to equities, the risk is no greater than if you own shares. So let's talk about how to set your goals, and we'll begin at the trade level and work up. First, goal setting exercise should begin with the price of the stock. We'll use the symbol P here, that you're paid or will be paid to buy 100 shares. Note on a trade level, we're not using the total capital here, just the price per share, so we get an accurate return percentage for the trade. That return is what tells us if we're going to meet our goal. In this example, we will use American Airlines and assume you bought 100 shares at $42 per share. Next is the premium or the cash you're going to collect. We'll use the letter C here, and for purposes of illustration, we'll assume a weekly call option just out of the money. The premium on that option is 34 cents. Now, for any single trade event, you need to know what the return on this trade is, what it will be. And why do you need to know this? So you always meet a minimum goal for income, whether it's a one-time trade or it's something you're doing week to week or month to month. If you do not know what your return is going to be, potentially, you'll make random trades with your focus in the wrong place. Let's correct that, because that can lead to losses even when selling calls. Don't be that kind of trader. Set a goal and make sure your trades meet or beat those goals. To get that, divide your cash collected, the premium, into your price per share. Example, American Airlines, you own 100 shares at $42 a share. You've collected 34 cents, that's C, you're dividing it into P, $42. The return on the trade is 34 cents divided into 42, or 0.8%. Now the goal for the trade, remember, was 1.5%. Result, this trade exceeds your goal. This is a trade you would want to make. You don't have to collect outrageous premiums to be successful and wealthy selling covered calls. So let me put some crazy numbers in context for you. Let's say you use just 5 stocks and sell one weekly covered call, and the best you can do for a premium of 30 cents in every trade. That's 5 times 30 cents is $1.50, times 100 is 150, times 52 is $7,800 in cash income. 5 covered calls generating 30 cents each is a total of $1.50 in cash per share. Multiplied by 100 shares for each covered call, this means you're collecting $150 in cash each week. If you do that 52 weeks per year, that's $7,800 in cash income. You don't have to wait for it. You don't have to go to the bank to cash a check. You don't have to wait for the dividend to be announced. This is what I mean when I say you can have cash on demand every week. Are these numbers outrageous? Frankly, no, they're not. They're conservative. But the overall impact week by week and month by month is huge. What this means is you don't have to hunt for big premiums in order to get significant income. That's where most people go wrong. Instead, a consistent application of this process, goals first, trade second, that's how you create sustainable, significant, well above average returns on your portfolio. Consider this 3-stock portfolio collecting premiums of 34 cents to 43 cents per weekly call option sold. You might think you can't make any money collecting premiums that low without selling tons of contracts. Actually, you can make a lot of money. Look carefully at those numbers. It's a small portfolio. Using just 3 stocks, selling 1 covered call per week. Your potential annualized return is 54%. Let me repeat, your potential annualized return is 54%. Yes, this may seem high, but in this case, the portfolio is that of an investor who's chosen the companies and stocks for that portfolio with calls in mind, with calls being the tip of the spear of that portfolio, the cash generator most people ignore when selecting a stock. More importantly, we've met our goals at the trade level on a weekly basis and on an annualized basis. Each trade exceeded our goal per trade. Combined, the trades exceeded our goal for weekly income, and if we continue this for a full year, we clearly beat our goal for annual income. Let me repeat, that's the first secret, the first thing most people miss, setting income goals. Identify trades that meet our goals by trade, weekly or monthly and annually. So let's move on to what you might call the second secret, finding the right stocks. This is a second reason most investors don't get the cash from the shares that they own, that they want, that they deserve, that they can have. They don't pick the right stocks. I'm going to teach you my simple process to selecting the right stocks to trade for income. First and foremost, especially in today's volatile markets, it's imperative to find stocks that have long-term growth prospects because those will be the stocks that you can use to meet your goals for income with lower risk. If you followed me for any length of time, you know I'm a believer.